What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, I got a TWR training class, and we're going to talk about technical indicators. But right now, I need you to hit that like, share, subscribe button, and I need you to come along with us on the journey, man. Check out the description. Everything is there to make you a better and more successful trader. A lot of tools and tidbits. Now, if that sounds good and if you're ready, then follow me. Let's go to war. TWR wants to remind the viewer that all content on this channel is for entertainment and education purposes only. You are responsible for every decision you make within the stock market. Have fun, use caution, but always, always, always go to war. So using technical indicators. What are technical indicators? Basically, they're indicators that use historical data and a mathematical equation to go off price, volume, and open interest in securities and contracts. And basically, people use the term TA. So if you hear TA is top. So who uses TA and why? Well, technical analysis and chartists look for technical indicators to go off of historic asset prices and to judge entry and exit points. But that's also us retail investors. We use TA, and basically we're looking for patterns. Anytime you look at a chart and you're trying to make an educated decision on where's the best time to buy this particular stock, or do I want to make a call or a put option on this particular thing, and you're looking at charts and some underlying indicators, you are using TA. So what types of TA are commonly used? We'll bet there's two basic categories that all of the TA and indicators and all those things go into: overlays and oscillators. All right, so overlays are using the chart price that you see when you Google up a particular ticker and it pops up the chart. Well, an overlay is indicators that go on top of those bars that you see, or price actions. And it's basically a price scale plotted over top of the stock charts. And examples of these are moving averages and trending lines. Oscillators are the indicators that go in between a minimum and a maximum range. And examples of those are MACD and RSI. Our focus today in this presentation is going to be on the overlays. So when we're talking about moving averages and trend lines, moving averages are, remember, mathematical equations used to create averages compiled of historical data. And this helps to create smooth data of stock prices that may be volatile, and creating an average price for us to plot on the chart. Trend lines are lines drawn on a chart that connect a series of price movements, usually a high point and a low point, and they're manually drawn by the user, but some indicators also have them in there. There's certain ones, but they're good to give an idea of certain patterns. Trend lines to give you an idea of the possible direction that a stock may go into. So let's talk about moving averages a little bit, right? So it's a TA tool that's used to identify a directional trend, commonly used to determine support and resistance. Longer periods of time, the greater the lag, due to historical data being used. Examples of this that are commonly used in the moving averages are a 20-day moving average and a 200-day moving average. These are used by institutional buyers and retail buyers and just traders and investors to give an idea of buy and sell signals. So remember, even when we're using moving averages, we're looking for patterns within a particular stock. And if you see the red arrow, those are the moving averages that we're looking at on this particular ticker, and we're using PLTR on this example. But I want you to also look for the patterns. So in the red square on the left, I put one pattern that had a similar moving average of where it was ranging at, and then you see the future of what happened to it. Well, currently we're near that same type of moving average pattern where we're below the 200 and the 50, but we're above the 5-day moving average. So just like before, if patterns repeat themselves, they tend to do, but they don't always have to, we could be possibly looking out for a breakout towards the upside. Now let's get into trend lines, okay? Trend lines are connecting high and low prices, looking for patterns within the price action, different time frames for individual users. Basically, the daily chart, in my opinion, works best for swing trades. And if you're looking for day trades within the particular trading market day, then you can use the 1 minute and 5 minute charts. However, there's going to be a lot more noise and a lot more price action and volatility when you're looking at just the 1 minute and 5 minute charts. So I usually stick to the day charts when I'm doing my trend lines. All right, so when we're looking at NIO, and I picked this particular chart because it's actually difficult to read because it's so volatile and a lot of the price action is all over the place. But I want you to look at that top right. That is a recent resistance point, the top blue line, and then the bottom red line is a recent support point. I also want you to pay attention to those red boxes. Specifically, the red box on the left was the last time it came down to that support line, and then you see the results of what happened after that. Now, on the right red box, that's the current time frame we're at. Definitely, we edged down towards that support line, and we started creeping back up. And now you see the purple lines. Those are intra-support and resistance lines that you can gauge that a stock has to meet and close above these particular lines in order to go to the next point. This kind of gives us an idea of the direction the stock will go in if it meets and exceeds those particular trend lines. Now that green box is important because that's a wealth accumulation period where there's a lot of tight price action, selling and buying within a given period, and we can use that to kind of gauge on the direction that the stock will go next. And as you see, if we can get above that important line level that I have there with the green arrow, if we get above that, the intent would be that we're probably into an upswing and that a breakout from this current price action area is imminent. So why does TA matter? Well, if you believe in TA, then you believe that patterns tend to repeat themselves, trading isn't just doing through robots and AI, and that investors have some kind of emotional value to what they own and how they trade. Have you ever thought of why a particular stock tanks before it hits a particular exit point that you have in your mind, such as $5 or $65.50? That's because it's emotional trading that humans are known to do, and we relate certain levels with psychological levels of support and resistance. And so these market makers and these big institutional people, they know that, well, we're having a lot of up and down movement here. I bet a lot of people are setting their sells for $5. Well, we're going to go ahead and do a big sell-off at $4.97 because the majority of people got it at $5, and it's going to start tanking, and then they'll shake weak hands, and they'll get out, and the institutions can buy at the lower level and raise the price back up. So next time you're looking at a stock, think about that. Where is your mental exit point, or where are you putting your exit points at? I do it too. I like to stay rounded numbers and even numbers and on the dollar thing. So, $6.50, $7, $7.25, so on and so forth. But next time you look at a stock, pay attention to that a little bit, because you'll see what I'm talking about, and you'll be like, man, it was so close to my particular level, but it just didn't hit it there. And then it tanks, and then all of a sudden you get a lot of selling pressure, and then it just shoots up even further past your original price action that you had in mind. All right, guys, I hope you got something out of that video. Like I said, I plan on doing these free training classes on the Discord and things of that nature so that you guys can get, some good content from real people, and not just that, already made content that everyone has looked at from time and time again, because we all trade different styles, and sometimes you just need to hear it from a real person and not one of those professional people telling you guys what you want to hear. So remember, Traders War Room, We look at the stock market like it's a war zone. Stocks and sector, those are our battles, and we're doing it together as a team. We're cultivating and creating a true environment of shared learning, growing together. If that sounds good, then all I got to say to you is follow me. Let's go to war.